Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update today, 13th of December. Today was a big day. We got CPI data. Inflation rate year over year decreased from 7.7 to 7.1, 0.6%. And the expectations was 7.3, so good news. And month over month, inflation, general inflation decreased from 0.4 to 0.1. We were expecting again 0.3, so both readings were better than expected. What about core inflation? Year over year, we got 6% instead of the 6.3% previous one and 6.1% expected. And month over month, also a decrease from 0.3 to 0.2%. We were expecting flat numbers. So these are good news. And what about markets? What market did? So we pushed almost 400 points. Look at this. From here to here, 3.55%, 423% on the Nasdaq, points on the Nasdaq. And one of the things that I usually say is that don't be too bullish, because greed is something that is dangerous. So as soon as I saw this spiking, this is the 1 minute chart, we got 300 and almost 30 contracts on the Nasdaq at 12,332 or 31. It was rejected. We again, this was 1 hour before the open. So we were again going bullish before the open, and we couldn't go higher than this one. This was big resistance level with a lot of transactions performed up here. And once, let's remove this volume profile. This is the open. Once we started once market opened, we were low. We tried to break high of day and perhaps moving higher, but we got rejected. And this is something very interesting, because everyone was so bullish. And we were so bullish that the market, the only move that was allowing is just going lower. Look at this. We just rejected all this move. Right now, we are at almost the same level. We just bottom top, also almost top ticked 1,900. So we retraced 400 points on the Nasdaq. So what is happening? I don't know. I don't know what is causing this, because we were super bullish, but I think perhaps we are waiting for tomorrow to see interest rate decision. If we get 0.50%, 50 basis points, I think we can reclaim these levels and again push 12,000 and 400. So this is quite surprising to see. I was quite bullish at the open, but I mean, soon we saw that market didn't go up, and instead we're grinding lower and lower and lower, and finally right now into lunch hour we are down here, giving back all this move that was on CPI news. Interesting to see. Anything can happen anytime in the markets. You have to learn that, and this is a very good example. Crude oil 4%. Look at this. This is bad. We are spiking from 70. Remember, US is replenishing his strategic petroleum reserves at $70, and that's why we are finding support down here, and we are bouncing and trying to catch some buyers on the way up. Natural gas also green, so energy is actually quite good, 2% on the day. And however, dollar is pulling back. This is a nice move. This is a nice move going lower, and we have empty space below. So dollar is not a problem anymore for us. The problem is that energy is still surging, still going up, and recession. We don't know yet how much Feds are going to push the economy, to push the terminal rates for next year. And yields retraced, pulled back a lot today. This is something we expected because inflation is not that high anymore. We are not increasing. Maybe inflation has peaked, and we are nicely trying to trend down. US 2-year is almost 4% in the negative today, and 10-year is also minus 3.5% on the day. Be careful with this support. So what are the terminal rates right now doing? So this is December this year, 4.1%. If we go back and we check what are markets pricing in for the next interest rate hike, almost 80% are pricing in 50 basis points. So from 375.4 to 425.450. So 450, 425, 450 is going to be most probably this year's end terminal rate. And 4.1, maybe we can, once tomorrow confirms this trend, we might see a push higher into, I think, to these levels, something around 4.1, 4.2. This is expected. And once we finish this year, next year, this is April 2023, we are getting 4.8%. So the terminal rate for April still is not 5% as we saw in the past up here. We pulled back and we are now pricing in 4.8%. September, 4.75%, so no cut. And then at December, we are pricing in a bigger cut until 4.42%. So I think that would be like 25 basis points cut. First cut expected to be on December next year. So we will be going up until 4.8%, stay that high until September, and then on December, we have the terminal rate for 4.4%. So I think this is going to hurt, this is going to impact a lot of the economy, more than we are seeing right now. And this is why I think markets are still in fear, are still not trusting the Fed, because maybe that soft landing, look at this. This is quite bad to see. Maybe markets are not trusting Fed for that soft landing, and maybe we are entering a deeper recession that we were initially expecting. So right now, inflation is not, I think it's not the focus anymore in the markets. Markets are worried about recession, and we need news towards that positive recession. What else? Well, I think stocks are quite nice. Look at this. We are going lower. Are we going red on the day? This might be super bad. So watch out. This is a great example of why you have to manage your risk, to manage your position, and to take profits, because you never know, anything can happen. And right now, the worst is happening. Fear is in the markets. Recession is the primary focus for everyone, and perhaps tomorrow we will have to wait for tomorrow for Jerome Powell to calm the markets and again try to encourage everyone with the positive message about a soft landing is possible. And that's all. We are giving back all the move that CPI got. Thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. This is super helpful for me. I am putting a lot of effort on doing this for you, and I will appreciate likes and the subscriptions to the channel. I upload new videos every single day for market podcast, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market recap. The trading day is not over yet. This is very bad. This is quite sad to see, so be careful out there. Discipline and risk management are key for success. Stay safe, everyone.